2017, the number is calculated at 6.7. I'll come back to this in a minute. And we expect this to fall to 5.4% of GDP. I think there are a few trends that are important there. Exports, particularly tea, appears to be quite strong, both in terms of the volume and price. It's also interesting that the markets are now much more diversified. I'm talking now tea. We've expanded into Asian markets, rather than just focusing on one country or a few countries. Sri Lanka, excuse me. So we've diversified our partners in terms of tea exports, and that also obviously works in our favor, not only in terms of pricing, better pricing, but also in terms of stability of the destination. The other things also that we could talk about, but horticulture also have been rising. Horticultural exports, those also seem to be doing very well. And of course, there is the perennial remittances by our diaspora. That also is an important element to look at. I think from month to month, it's going from record to record. So 200 million plus US dollars in monthly remittances, which obviously works well for us. I don't want to say too much beyond that in terms of the external sector, but I wanted to flag a specific problem, a specific issue regarding the numbers for 2017. We received all of us received the early data, meaning the first print data for 2017 in the economic survey that was issued, I guess, at the end of April. And looking at the numbers, there is an interesting, curious, let's say, development there, which is looking at the deflator. The deflator, from our perspective, appears, I know this is a bit technical, but I think we are all technicians, aren't we? So the deflator is a bit, is curiously low. We expected it to be in the order of, say, 8% plus. So 8%, and if you include the real growth of something like 5%, you'd end up having a nominal growth of GDP of something in the order of 13%. Actually, what happened here, it was much lower. It was something in the order of 2.7%. And we have asked KNBS, who are the custodians of these numbers, to actually see if this number is really right. It's quite curious because it's never been this low. Anyway, I don't want to go beyond that, but I just want to mention to you that this has led to a sort of a substantial change in some of the ratios because you are calculating them in terms of GDP. So the current account appears much larger than we were expecting, not because the dollar value or the shilling value has changed, but rather because the projected GDP was much higher than the actual, meaning the projected GDP deflator was much higher than the actual deflator that actually was put out, was circulated. So that's something, and these are data issues, but I think we should all appreciate their data issues. And I guess it confirms that we are interested. We do need to go down to the details, roll up our sleeves and get to that. Okay, so a few points then about the banking sector. The sector still remains resilient, as we have mentioned, and the trends are positive in many ways. There's the issue of numbers that we give you in terms of liquidity. The sector on the whole is quite liquid. The ratios we gave you in the press release, and also in terms of capital. But the interesting thing, from our perspective, is something else that we have done. we've been seeing these NPLs inch up little by little. And the question has been, well, what is actually driving them? And I think we mentioned before some of the sectors that were driving them. And we even told you, for instance, in two particular cases, I think this is like 3 meetings ago, we did talk to you about some specific, let's say, large building projects. I don't remember which month that was, and we have been following it. So this time around, we did a more detailed survey, meaning talked to many of the bankers about one particular issue, which is the issue of delayed payments by government and the private sector. So private sector, you are probably running a particular enterprise, you are delivering supplies, and you are not paid on time, and you have a loan that you intended to repay using the proceeds from that transaction, and therefore you cannot repay. The bank knows that whole scenario. What we found interesting is the extent of it. So actually, about 10%, the precise number is 9.67. So about 10% of banks' NPLs, so these are non-performing loans, about 10% of them relate to these delayed payments by government and the private sector. That is substantial. So you can see it's a bit of a catch-22, right? Or rather, so that is a big issue. Now it's true, when you look at the precise, what the NPLs as a ratio of assets really is, or loans is, it has increased marginally to 12 point something. And actually, if it were not of this 10% of delayed payments, that ratio would have been much lower. It would have been at least 1% percentage point lower than where we reported it. So I'm just making the point that this is substantial. And remember, for a loan to be NPL, to become a non-performing loan, to be classified as non-performing, then there would not be payments to it. It wouldn't be serviced more for at least 90 days. So it's a long time. We're not talking 1 month. We're not talking 1 week. You still have those loans that maybe have not been repaid over the last month or last 2 months. They're still not NPL. Maybe they have been impaired, their quality has been impaired, but they are not yet NPL. So I'm just pointing to this specific issue. Of course, we need to work with the banks and also hopefully work with the others in the equation to ensure that the payments are done on a timely fashion. It is important that those resources circulate. Now, it's also interesting for you to know that if you look at some of the specifics, if you look at real estate, I'm now talking sectors, if you look at real estate, the problem there appears as saturation in some of the buildings, right? Or the building projects. I guess the key one here is malls. There was a time malls were coming up like mushrooms everywhere. And now you look at, say, Limuru Road or Thika Road or Mombasa Road, and you see a sort of saturation. And the occupancy in some of those malls is actually very poor, very low. It's like 25% or a quarter. And that is problematic, particularly because maybe they did not secure the sort of anchor tenant, whether that anchor tenant was a large store, whatever brand store, brand name, or whatever else it is. So that really shows that there is a concern there, which will take maybe 3 to 6 months to resolve in particular ways. And then, of course, you have trade, suppliers to counties, for instance, suppliers to some of people that are building roads and things like that. So I'm just making the point that these are things that are obviously outside the central bank's mandate, but they are at the same time inside our mandate in terms of how to resolve them because of our connection with the banking sector. That's what I wanted to say about this, the banking sector. Now moving on quickly to other things. The financial sector, more generally, the markets, I think you've been monitoring how the, let's say the T-bill market and government securities markets have been going, how they've been, the developments there. And it's interesting that now the 91-day Treasury bill is below the, it's at 8%. The last time it was this low, or the last time it was at this level was back in October 2015, which then led to the shock of T-bill rates skyrocketing to like 20% and all those other things. So that's a movie we don't want to see again. But I think the pain still is with us to this day. But in any event, the point I'm making here is that actually the government securities markets have been well behaved. As a matter of fact, they tended to be oversubscribed. And for that matter, the yield curves, they are well-defined yield curves. I've made this point before, that this is one of our major successes in terms of developing a yield curve that you can depend on and other investors can depend on. I will skip on the market perception survey, although the only point to make there is that there has been a lot of optimism. There is a lot of optimism that remains. There's also some positive numbers in terms of occupancy of hotels and things like that. This morning I went to a hotel to give a speech at a conference, and I asked, it's one of the hotels at the Upper Hill, and I asked the people there, so what's the occupancy rate? And he told me 65%. I said, 65, that's kind of low. I was pushing him. Because actually, you're okay. Yeah? Actually, the break-even, well, a rate that you generally shoot at is 60. Well, I don't know. I'm now talking from my Caribbean experience. But in any event, so 65 was pretty good. And obviously, this is not peak season. And said, oh, no, but we'll, so he was very defensive. He said, no, we'll get to 100 very soon. You know, he then told me that, I forget what he told me, the precise date, but we'll be at 100, which I thought was a bit excessive because I don't know a single hotel that really remains at 100 at a sustained level. But in any event, I'm just making the point that there's a bit more optimism and also actual numbers are supporting a sort of a favorable projection, and this is what the market perception survey was showing. By the way, this will be published, the market perception survey. Once it's cleaned up, it will be published, just like we did 2 months ago. I hope that was something that you looked at and you found to be useful for your own articles and things like that. We want that to be a continuous sort of, to continue putting it out there, not only when things are good. We should put it out there when things are good, bad, or ugly. Going back to that movie, the good, the bad, and the ugly. A couple of things to, well, just maybe 2 other things here. On fiscal, suffices to say that the MPC noted the government deficit target for this fiscal year that ends next month of 7.2% of GDP. And we also noted that they had already issued expenditure control circulars, which are normally issued in June, but they have already issued them in May. So, and also noted that the expectation of a target in the next fiscal year, which is FY 18-19, target of 5.7% of GDP. This is the deficit target. So all those are good. So the issue is obviously pulling them through, meaning actually realizing these targets. And I think the point here is that, yes, this is one of the reasons why the MPC felt that if this is carried through, there will be some rebalancing of policies, meaning let's say there will be more space, therefore, available for accommodative monetary policy as fiscal policy becomes tighter, meaning less loose. Now, in terms of the deficit, the domestic borrowing target, this has been revised down. It was just revised down a week ago to 268.7 billion. That's the deficit target that now we are shooting for this fiscal year. Now, actually, we have already achieved it, overachieved it actually, because the May 20th, which was just a week ago, May 28th, sorry, May 28th, just last week, just Monday, I'm sorry, I'm a bit confused. Monday, yesterday, May 28th, the number was 282.1 billion. So you can see we were already a bit higher, 13 billion higher than where we should, than the target. So it means for the next few auctions, on net, we will reduce, meaning on net we will have a reduction by that amount. So over the next 4 weeks, actually, there's a redemption, a redemption of about 100 billion. So 100 billion. And so what we'll be putting out is something like 100 minus 13. So that is what we'll be putting out in terms of gross borrowing going forward. Anyway, but I just want to make a slightly different point on this one, which is, if you recall, some of you back in August were concerned that we may not hit our domestic borrowing target. Well, here it is. We've achieved it. So, and we've achieved it even as we also had a well-behaved yield curve, also as we have had a reduction in TB rates, and even as we have borrowed longer. So in the long term, there was that 15-year bond that we put out recently and a few other bonds like this. So I just want to make the point that actually the government securities market, at least in the primary dealership, in the primary market, has been well behaved and actually strengthened and confirmed strengthening of the entire sector. Now we talk a little about the exchange rate market, but this, because some of you are a bit excited about it, I would say. This has been balanced, as you all know, quite balanced. And the point here is that actually we've also, not only have the inflows and outflows been quite balanced, at least not necessarily every single day, but rather on a week-to-week basis. And this has allowed us to actually maintain our policy of having a flexible exchange rate policy while minimizing volatility. So we've been able to, in a sense, to maintain that policy without that much trouble, or without struggling too much. So the interventions have been minimal in the market. As a matter of fact, the interventions on net have been purchasing so as to stop a sort of a very rapid appreciation of the shilling. I know some of you made comments about dividends, that this is the dividend season and therefore there will be outflows and things like that. Well, actually you are wrong on that, because you missed it. You missed it. The dividend season has passed. So it's a bit like going to to watch the migration in the Masai Mara, sort of like in September. Well, maybe we should go to Masai Mara in September anyways, but why is that? Because actually the dividends are the bigger dividends, and we are now talking something like 30 million US dollars. All those have happened. There are few small ones in the order of 3 million, 5 million US dollars, which is not that large even on a daily basis. I mean, let's put it this way: when they come into the market to purchase foreign exchange for oil, a shipment of oil. It's something in the order of 7 to 10 million, that sort of order. So it's not, so 3-5 million US dollars is not substantial in the sense of the market. So, but anyway, that notwithstanding, it's true there'll be a few others coming on. Then the other large one will be coming in November. So we already passed the big ones. The next large one will be in November, which is not can be dealt with. And all this are understood. In any event, it's also interesting that we have benefited from a reduction in risk premium. This is something that when you talk to the investors, you see that actually, and you look at the bond yields in, say, the Eurobond market and places like that, you'll see that actually we are really benefiting from the our premium is coming down, and therefore we are able to attract investments, or rather attract inflows, even as other areas are having, let's say, there is more market, let's say, turmoil. Well, maybe not market turmoil, disturbances, as we have seen in other parts of the world because of, let's say, the withdrawal of the unconventional monetary policies from the advanced economies. Okay, so there it is. In summary, the MPC saw scope for accommodative policy. As I said, from the perspective of inflation, it's well anchored. There's also a sense of rebalancing of policies, and also a sense of that the economy, there is a potential output, there's an output gap in the economy. So you can raise the output without really putting any pressure on prices. But the big question was how the last policy action of the MPC, that reduction in the CBR rate by 50 basis points, half a percentage point, how is that transmitting itself? And MPC was unable to unequivocally speak to that, meaning have clarity as to whether this has been that it has acted as according to theory, meaning in order to have that it was truly an accommodative stance and not contractionary, and all for that matter that it may have been perverse, meaning we lowered the rate, but actually what has happened to credit is just the opposite of what we thought would happen. So the MPC could not speak conclusively on that. There are some numbers that were there, but that we looked at, but bottom line is it was better to wait, get some more information, get some more data, instead of rushing in with a sort of a conjecture, sort of belief that it should be lowering is really accommodating, and then realizing later that actually we were going the wrong way all along. It's like when you get lost, the best thing is stop, figure out whether you're going in the right direction or you're going away from home. And once you figure that one out, then turn around and do the right thing. So I think it was the same sense of prudence, particularly knowing how easy it would be to snuff out what I would call green shoots when something is about to begin, and then you snuff it off at the beginning. It's much harder to restart it again. So we'll review this, but the MPC signaled the direction of monetary policy. So again, there is a clear sort of forward guidance as to where the MPC sees policy going. The direction of accommodative policy. That was very clear. In the next 2 months. So that's what I wanted to say about MPC, but maybe now that I have the floor, I could cover a few points, extra points, if you may. Do I get bonus points? No? I think we should give the government bonus points every now and then. Yeah? Okay, thank you. So, some things that maybe were on your mind.
Well, Central Bank Governor, that's Dr. Patrick Njoroge, they are painting a rather good picture of the economy, if Dan would agree with me. He was speaking about the issues that were raised by the Monetary Policy Committee, that's the MPC kept referring to, and he was speaking about the interest rates as well. They're maintaining the base lending rate at 9.5%. That essentially means the interest rates for the banks will have to remain at a maximum of about 13.5%. He gave a lot of justifications for the performance of the economy. According to him, one of the things he mentioned was the horticultural exports, which he says has strengthened the economy further, and also the monthly remittances from the diaspora, which is, he quoted it at about 200 million shillings, and he's saying that that is part of the reasons why the economy is a bit stable as we speak right now. One of the things he said, which he used the word curiously low, is the deflators, and Dan Mwangi will be breaking down what exactly they mean, but in layman terms, they're just the measure of price of inflation. He said that they expected them to be about at 8%, but they're curiously low and they're at 2.7%, and they're yet to confirm whether that was actually the actual figure, because he was saying they've never been that low before. However, he said that the GDP is somewhat higher than expected. He spoke about the banking sector as well and at length, and one of the greatest things he spoke about in that particular issue was the NPLs, which is the non-performing loans, and he says of about 10%, to be precise, about 9.6% are as a result of government and private sectors delaying payments, and that is one of the issues that has also come up with mostly the youth companies, and they've ended up being auctioned because they cannot pay, having received loans based on LPOs there. The governor says it's something they're engaging the banks on, and I'm sure you also saw this. He spoke widely about real estate. One of the biggest ones he mentioned was the building of malls, but he said that the occupancy remains at about quarter, which is about 25%. Essentially, that meant that by the time the malls were coming up, there were no anchor tenants, or the proprietors of those malls did not have anchor tenants, which he said is a worrying trend across the real estate area. But he also said the trade and supplies to the counties is also an issue that they're dealing with. They're saying that all affected the banking sector. However, he also mentioned that the domestic borrowing target has been achieved. They were looking, actually it's been surpassed. They were looking at about 268 billion. He says they've achieved about 282 billion as at Monday. So that means they've surpassed the domestic borrowing target of this year. He also said that the issue of MPC, that is the Monetary Policy Committee, realized that the economy has potential to grow, and they said that it's raised because mostly Kenya has had a reduction in the risk premium. That essentially means that we can attract foreign investors easier and faster from the developed countries. Away from that, Dan Mwangi will be giving you the details of all the business issues that are coming out of that particular press briefing. We're hoping they'll speak about the banks which are now on the spot for having been complacent in the issue of NYS. As soon as that happens, we'll obviously keep you up to date. Let's cross over to Kericho, where Kevin Mutai is standing by. The reason we're going there is because we want to hear the sentiments of the people down there. This is coming after almost all the suspects for NYS have been arraigned in court. We're expecting that to happen anytime from now. About 20 individuals were arrested in connection with the NYS scandal as at last night. The people who are listed were 40, and then those are the public servants, and there's more. 14 business persons, but as at yesterday, 20 of them had been arrested. We want to see if more of them volunteered and whether they're going to appear in court. But before we do that, let's get your sentiments. Let's start with Kericho County, where Kevin Mutai is standing by to speak to quite a number of people there. But before we cross over, I was giving you a list of the people we expect in the courts, and maybe not all of them might appear, but this is the list. It's number 32. We still have Jamal Duba, staff, that's the NYS, Julius Aire. And like I mentioned earlier on, they're trying to, the DPP said they're trying to make sure that they capture almost everyone who was involved in the procurement process, including from the top to the store manager, to the procurement officers, to the IFMIS people operating it, to the people, internal auditors at the Treasury. We have quite a number of them. Stephen Mashari is also there, Invoicer NYS. Don M. Kariungu, the IFMIS buyer, like I mentioned earlier on, and Kenneth M. Wathi is also there. This list still continues. Like I mentioned, there are 40 public servants, but these ones now are the directors and proprietors of companies. We have Ann Girita, Phyllis Njeru is also there, Catherine M.Y., Anthony M. Wamiti. Before I finish that list for you, we have so many of them. I'll be reading them as much as we can, just to list all the people who were mentioned by the DPP in that order. But for now, let's cross over back to the central bank, where the press briefing is still continuing. Let's listen in.
The banks must have been involved. Well, I'll tell you. We do have that responsibility. It's in our mandate to supervise and to oversee banks and their compliance to the tenets, or should we say the requirements of the various legislation, and the ones obviously that are at stake here or are relevant here relate to the anti-money laundering and combating of financing of terrorism, AML-CFT as we call it, right? And of course the other requirements that are prescribed by the Proceeds of Crime and Anti-Money Laundering Act, or CAMLA for short, other regulations including the Banking Act and various other guidelines. We generally do this through on-site and off-site surveillance. And I'm sorry if I take a bit of time and try and clarify a little. One of the ways we do this is through the annual routine on-site inspection of banks. We do this generally annually. And we check what has happened and how they are allowed, a bit, auditing, as it were. And then, of course, we do target inspections or targeted inspections based on the specific information that we may have from other regulators, in particular FRC, this is the Financial Reporting Center, or other things that may come to our attention. That piece of information, and once we go in, we'll look at all the tenants that surround that and branch out from that. Now, we have also provided banks with specific guidance as to how they should do various things. For instance, how they should do the suspicious transactions reports, suspicious transaction reports, STR for short, and banks should flag for STRs things such as large, frequent, unusual transactions that are not related to a customer's normal business, or for that matter, things, reluctance to provide documentation. Anyway, all these large and unusual activities in dormant or inactive accounts, or company accounts who are transacting mainly in cash. I mean, these are all reasons to flag specific transactions. And it's on that basis that actually the bank observe the AML-CFT tenants and other tenants. So, I think the point I would make, though, is that all that has been happening, but it's also important, if you ask me, how to, whoops. Just this morning, when I was talking to some people, I told them that there's a Russian phrase, getting lost in a forest of 3 trees. So I feel like I'm lost in a forest of 3 pieces of paper, which is not good. But in any event, the point for me is just simply that over the last 2 years, 3 years, we have actually strengthened some of the requirements under the AML-CFT framework. Some of your readers have indicated that they are very concerned that actually when they go to move, let's say, 1 million shillings in cash, they go through various hoops. Million in cash, as if, or whatever other. This point that actually we've improved, strengthened the regulations and prudential guidelines. And, through in January, we did issue the circular, January 2016, issue movement of cash above, say, 1 million Kenya shillings. But also, we have followed it up with other requirements, or should we say other guidelines that maybe you are not aware of, to banks. And one of these requires that, or required in February of 2016, we require that all banks submit declarations on compliance with all applicable AML CFT laws, regulations, prudential guidelines, and things like that. And we require that the CEO compliant with those, they understand and are compliant with those things. I'm making the point that there cannot be any excuse that a CEO or the board does not understand the requirements of AML CFT or the various other regulations and guidelines that are there. And we've issued other additional guidelines. The issue for sure is not guidelines or lack thereof, but I want to put that to rest. The guidelines are there, we enforce them, and we will continue to enforce them. So what happened here? So the issue may be, it's not an issue of enforcement or lack of understanding, it is an issue of maybe people not following the guidelines deliberately or deliberately, because how else could you make a mistake that on things that you are completely aware of? So now we hypothesize, but I think the point here is that what we are doing is the specific investigations that we are conducting, right? So as you know, these investigations are in high gear. I know there has been press conferences, there's been statements, for instance, by the Director of Public Prosecution. And I just want to let you know that the CBK is working closely with the Director of Criminal Investigations, DCI, and other investigating agencies on this case. So we are really embedded in that investigating sort of environment. And as you know, there are two directions on this case. There are two directions that we are pursuing. And you could say that the first is from the recipient's perspective, and this is the first phase. And the reason for that is, as was explained yesterday, is to recover the resources as quickly as possible. And as you know, some of those have been frozen in particular ways. So enhancing the recoverability. And so that's one direction. So the recipients and those that were involved in the let's say, authorization and all those other things. And then, of course, you have the other dimension, which is banks and other entities that may have been involved in this whole case. And that, as was mentioned, that is the second phase that we will move towards. At the end of the day, all those that are complicit in this or who are involved in this will be held accountable. There's no doubt in our minds. That's where this is going. And we obviously will need to have a thorough investigation, as you can see is happening, to ensure that first, obviously, the recoverability, but also to ensure that the evidence is brought to the fore correctly as to sustained charges and things like that. I would want to say that even as this happens, the investigations, in a sense, are working from directions, right? So from the beginning, which is where the banks, which is where the authorizations and things like that are done, and also from the end, meaning where the recipients. So I just want to make the point that even as you say there are two phases, even as it's clear there are two phases, the investigation is actually coming from two directions. And for those of you that understand this, this is the pincer move. I don't know if that's understood, but I throw that in. That's all I would want to say about this case, particularly because the investigation is ongoing. I don't want to say anything beyond this. Finally, I think all of you saw
Central Bank Governor there, Dr. Patrick Njoroge, like I mentioned earlier on, we just caught him in the nip of time when he was talking about the issue of the banks which have been complicit in the NYS heist. And he's saying that the banks have been involved in the NYS scam. That is one thing that is made very clear. And he's also mentioned that it's not an issue of lack of guidelines. It's just people who are deliberately making mistakes. They quoted the anti-money laundering and counter-financing of terrorism, which is referring to as AML-CFT laws, which he says exist as it stands. He's saying that they've also launched routine inspection of banks in terms of auditing, but he's also mentioned that there is no excuse that any CEO does not comply with the AML CFT, in as much as he said that CBK is working with the DCI and other investigation agencies to bring to book the people who are complicit in the NYS heist. Most of them was the bank's issues. And Dan Mwangi is joining me here in studio. And Dan, this is not anything new really. I mean, the CBK governor says that the laws are there. It's just people are deliberately not doing what they're supposed to.
Yes, you know, he's pointed to there being people who are actually flouting the law. Yeah. They're actually flouting the law in terms of the banks. And he said he's pretty much stuck to the government script of what was said yesterday by the DPP, where they're saying that the first phase of investigations is going to be dealing with getting the people who receive, the recipients of the money, yeah, or the funds, because they want to find a way they can quickly recoup them. Some of the accounts have been frozen. But then he's also now said, as the same thing as the DPP said as well, is that in the second phase is going to be the banks are some of those who are going to be investigated. The banks, because he says it's very obvious, because they have the mandate of monitoring the banks. He says it's very clear, at least from the CBK's end, that there are people who flouted the law, yeah, and allowed monies to pass through without there being the proper checks and balances.
But doesn't that also implicate the CBK on its own? Because he also mentioned that the CEOs are supposed to give the AML-CFT report every other time. Does that mean then that the CBK did not oversight enough to realize that there was a bit of a disconnect?
Well, that's definitely something we wait to see how it will be handled, because in itself, you know, ordinarily when you're trading $1 million bob plus, you're meant to have a certain citation that you're meant to give to the banks, which is then actually meant to be submitted to the Central Bank of Kenya. So I don't know, this may be speculation, but could it be that there are actually people in CBK as well who colluded with this? Because we saw in yesterday's list, we had people from Treasury being mentioned being arrested, being in the list of arrests that you've been reading there this morning. Yeah. And so the CBK governor says the issue is maybe not following the guidelines deliberately, because how else could you make a mistake on something that is already there? Yeah. Meaning that then again, we've been getting reports of people saying that this investigation began a bit earlier on than we are seeing. So it's pretty much like the DPP said, they have enough information, enough evidence to have solid cases. So I mean, that's the next thing. Banks right now maybe having their own conversations, because I know a number of them have always been pretty concerned about, for those who may have some dirt on them. Yeah. The central bank governor has not been the kindest to them. And so this is another test for the CBK governor, because one of the first tests was when he was having banks which were having a lot of fraudulent operations, and yeah, they had to take some of them seize some of them, the operations, and take over the operations in receivership. So now this is yet another test for the CBK governor, who's known for his claim of being very big on integrity, yeah, partly because of his faith and just the kind of person he is.